You are now tuned in to the PPC podcast. Subscribe now for more exclusive content.
First-time buyers at the moment, it's a little bit of a tricky time.
Yep.
What are your thoughts and what would be your advice in that respect when it comes to first-time mortgages, considering what we're going through at the moment?
Okay. Well, the lenders are trying to get out there and do it at the moment. There's obviously 5% deposit is typically what you need. There's even a lender out there, if you've been renting for the last 12 months, that will base it on the affordability of what you've been showing that you can prove to pay.
Okay.
So there are certain schemes out there that can allow that. Obviously, you have to prove it and all of those various other bits.
Of course.
Lenders, from the affordability, it's not as cut and dry as X amount times your income. They do that. So 4.5 times is pretty standard. 1 or 2 will do a little bit more, but they will base it on the affordability. Does it look practical? And they'll check things like bank statements, the credit report, and see that. So, for instance, if I was earning 30 grand a year and I had no debt, I would probably be better than somebody earning 40 grand a year, but I've got a car on tick, I've got credit cards, and I've got this, because of a lot of that other money is being spent out. So I need to be able to show what else am I affording. So there's that side. The credit side, they can be a little bit more lenient. Like I say, going back to, they can have the odd little blip here and there, but as long as it's more historic and the more recent history is looking good. And there are other schemes as well, like they call something called joint buyer sole proprietor. So let's say you like a guarantor mortgage, but it could be anybody sometimes. They can go on it with you to help boost your income, to help give you that extra bit of a leg up. So there are other schemes that can be done for first-time buyers. So yeah, it's not so bad. It's just, again, getting used to the fact that the rates are more expensive. And if they're a first-time buyer, let's be honest, they're not going to know any better. It will just be what it will be. I think there are some times where you'll find that you could look at a mortgage and think, I could buy a house. The lender might say you can borrow a lot more, but you might say, well, actually, I don't want to pay that much each month. What I want to pay each month is this. And I think it's going to be based on that. But yeah, again, it depends on what you're looking at buying. If you're buying just to get on the property ladder, you might be wanting to look at where you are in 2 years, especially if your income's likely to rise considerably, or whether you're buying on your own. Would you meet somebody? Do you start a family? Just things like that. The things that on paper that the banks don't necessarily consider, I think that the individual should consider, is things like, well, what's my next move? To think about whether or not they do the 5-year or the 2-year, or they look at something different and make it tailored to them.
So, considering the market at the moment, within your work, are you seeing much first-time buyers coming to you?
We are, but I think that's part of the reason why house prices have come down a little bit as well, because when mortgages are more expensive, then all of a sudden, if I was buying a house for 200, 300,000 5 years ago, when the rate was 0.25, it's only costing me 700-800 quid. Now it's costing me 1,100 quid. And I got to be asking myself, with the added cost of fuel and everything else being more expensive, my average household living cost has gone up. Do I want to spend that money on that property for 200, 250, 300,000? I might bring it down a little bit. But we are seeing first-time buyers come into the market, but they're being a little bit more conservative about what they're spending because of where the rates are now.
Cost of living and everything as well.
Yeah.
So what would you say to landlords